Good morning. Thank you for taking time today to listen to Zefiro's earnings call for the third fiscal quarter of 2026. Before we begin, I'd like to remind everyone that today's call will include forward-looking statements within the meaning of applicable Canadian and U.S. securities laws. These statements reflect Zefiro's current expectations, estimates, projections, beliefs, and assumptions as of the date of this call. Words such as anticipate, expect, intend, plan, believe, estimate, may, will, should, could, continue, forecast, potential, target, goal, and similar expressions are intended to identify these forward-looking statements. Forward-looking statements in today's call may cover, but are not limited to, our strategic initiatives, business plans, regulatory environment, growth prospects, financial performance, operational outlook, project timing and scope, market conditions, funding and capital requirements, partnerships, carbon credit sales, and other business developments. These statements are not guarantees of future performance. Actual results may differ materially due to risks, uncertainties, and other factors, many of which are beyond our control. Such risks include, but are not limited to, fluctuations in pricing related to our services, changes in regulation and political environments, operational and financing risks, project execution delays, reliance on third parties, competition, and broader economic conditions. For a full discussion of these risks and assumptions, we encourage you to review Zefiro's filings on SEDAR+, including our most recent annual information form and MD&A. Zefiro does not expect to update these forward-looking statements except as required by law, and we remind listeners to view them with appropriate caution and not to place undue reliance on such statements. Finally, this call is for informational purposes only and does not constitute an offer to sell or a solicitation to offer to buy any securities of Zefiro Methane Corp. I will now hand the call over to our CEO, Catherine Flax.
Good morning, everyone, and thank you for joining Zefiro Methane Corp's earnings call for the third fiscal quarter of 2026. I'm Catherine Flax, Chief Executive Officer of Zefiro, and I'm joined today by our Chief Financial Officer, Michael Downs, as well as Luke Plants, Chief Executive Officer of our subsidiary Plants and Goodwin. This past quarter, along with the first half of our fourth quarter, has been one of great transformation, and I believe a significant step change in the trajectory and outlook of Zefiro. Some meaningful changes that we have accomplished since December 31st include that we have closed successfully a private placement with 2 European institutional investors, raising approximately $3.3 million USD. This was our first equity raise since our IPO in 2023. The proceeds from this financing will be used for growth, primarily the acquisition of new assets and working capital. This transaction reflects growing international recognition of Zefiro's value proposition and further strengthens our balance sheet as we pursue continued growth. We acquired equipment from Viking Well Services for $4.3 million through our subsidiary Zefiro Ohio Holdings, LLC. This acquisition adds 5 derrick rigs and other key equipment to our fleet and is expected to contribute approximately $10 million in additional annual revenue. Michael and Luke will speak to this in more detail, but I want to emphasize how strategically important this is for Zefiro's growth trajectory, both in terms of capacity and geographic reach across 13 states. We made significant progress in reducing debt obligations through a combination of cash flow management and structured debt settlement arrangements, improving our financial flexibility and strengthening our balance sheet heading into Q4. Our Plants and Goodwin team completed our first ever project in Louisiana, a $5 million plus energy infrastructure engagement, 3 weeks ahead of schedule, a tremendous operational achievement. With a contractor license now in hand, we are well positioned to pursue additional opportunities in the Gulf Coast market going forward. We received an overwhelming sign of support from the majority of shareholders with the successful results related to the proxy battle, resulting in clearer governance, leading to a stronger foundation to grow the business. As I walk through these points, it amazes me what the team has accomplished in such a short period of time. Most companies don't complete this much in a year, let alone 5 months. That's what excites me so much about what we are building at Zefiro, and the opportunities ahead are substantial. I do want to take a moment to address the annual and special meeting of shareholders that was held on March 20th, 2026. The meeting was contested with the dissident group nominating an alternative slate of 5 directors. I am pleased to report that all 5 of management's nominees, Corinne Loeffler, Darrell Heald, Johnson Sun, Hudefa Moalawa, and myself, were elected by a clear and decisive margin. A total of 78,569,485 common shares, representing 86.7% of issued and outstanding shares, were represented at the meeting. Management's nominees received approximately 55.3 million votes each, compared to approximately 21.8 million for each of the dissident nominees. I want to sincerely thank our shareholders for their trust in the current team's strategy and direction. We are all committed to living up to the confidence you have shown in us. I want to welcome Hood to the Zefiro Board of Directors. We're excited about the financial experience he brings to the board and believe he aligns well with the current board to drive growth. Being in the UK, he is also a great conduit for our growing population of European investors. With the proxy contest now resolved, I can assure you that the board and management team are fully unified and focused on executing our growth plan. Turning to our fiscal third quarter's financial performance, Mike will go into detail shortly, but I want to provide a brief overview. For the 3-month period ended March 31st, 2026, Zefiro generated approximately $11 million USD in revenue, representing growth of approximately 58% year over year. This is a strong result and a testament to the hard work of our teams in the field. On a year-to-date basis, Zefiro has now generated approximately $33.2 million in revenue for the first 9 months of the fiscal year, which reflects the meaningful progress we've made in scaling the business. I'm proud of what the team has accomplished, and I remain confident in the path ahead. I'll now turn the call over to our CFO, Michael Downs, to discuss the financials in more detail.
Thank you, Catherine. Q3 continued the strong financial momentum we established early in the fiscal year. During the quarter, we delivered meaningful year-over-year growth in revenue and gross profit, achieved our 3rd consecutive quarter of positive adjusted EBITDA, and made significant progress strengthening the balance sheet through disciplined debt reduction initiatives. As a reminder, all references to currency are in US dollars. For the 3-month period ending March 31st, 2026, which represents the 3rd quarter of Zefiro's 2026 fiscal year, revenue totaled approximately $11 million, representing growth of more than 58% compared to approximately $6.9 million in the prior year period. Gross profit for the quarter was approximately $2.6 million, compared to approximately $1 million in the same quarter last year, reflecting continued operational leverage and improved project execution across the business. Adjusted EBITDA was $445,000, marking our 3rd consecutive quarter of positive performance. It is important to note that the results during the quarter included approximately $650,000 of one-time expenses associated with the dispute involving the company's prior management team. Turning to our fiscal year-to-date results for the 9 months ended March 31st, 2026, revenue totaled approximately $33.2 million compared to $24.4 million in the same period last year, representing year-over-year growth of 36%. Year-to-date gross profit increased to $10.7 million compared to $4 million in the prior year period, highlighting the significant improvement in both scale and operating efficiency across the organization. Adjusted EBITDA year-to-date was approximately $4.25 million, representing a substantial improvement and demonstrating the earnings power of the business as utilization of operational density continue to improve. For the 9 months of fiscal 2026, net loss improved significantly to approximately $998,000, compared to a net loss of approximately $9.9 million during the same period in fiscal 2025, an improvement of approximately $9 million. Turning to expenses, disciplined cost management remained a key priority throughout the quarter, and we continued to drive meaningful reductions across several core categories. Consulting and management fees declined approximately 62% year-over-year to roughly $66,000. G&A expenses decreased approximately 50% year-over-year to around $398,000. Salaries and benefits declined approximately 8% to $1.38 million. I also want to provide an update on our balance sheet and debt reduction efforts, which represented a major area of progress during the quarter. During the quarter, we reduced total debt by more than $4 million, lowering outstanding debt from approximately $12.3 million to $8.2 million. The majority of this debt reduction resulted from three parties associated with our $2.48 million secured loan exercising their warrants, which enabled repayment of the majority of the secured loan principal while also generating sufficient free cash flow to fully retire the $1 million Zefiro USA note. I want to note, subsequent to quarter end, the company incurred $3.2 million in additional long-term debt obligations, consisting primarily of the $2.9 million seller's note associated with the Viking equipment acquisition. On the acquisition front, I also want to briefly discuss the financial implications of the Viking well service equipment acquisition, which closed on May 6, 2026. The $4.3 million transaction consists of $1.4 million in cash, and as mentioned above, a $2.9 million seller's note bearing interest at 7% annually, with interest-only payments and a balloon payment due on April 30th, 2027. Management expects the acquisition to contribute approximately $10 million in incremental annual revenue, with the financial impact expected to begin contributing during Q4 and continue into the fiscal 2027, as the equipment is deployed across both new and existing operating regions. Overall, the results reported this quarter reflect a continued strengthening of the business and further validate the operational and financial transformation underway throughout the Zefiro organization. We remain focused on disciplined capital allocation, operational execution, and long-term value creation for shareholders. With that, I will now turn the call over to Luke Plantz to discuss our operational performance and project pipeline. Thank you.
Thanks, Mike. Q3 of our fiscal year was a strong chapter in our company's history. Our performance this quarter demonstrated the benefits of both the geographic and operational diversification we've been systematically building in the previous years. I want to start with the Viking well service acquisition, which I think is truly transformational from an operational standpoint. By adding 5 derrick rigs and their associated support equipment to our fleet, we are significantly increasing our total capacity. Just as importantly, we're gaining a presence in 5 new states where Viking traditionally worked, those being New Jersey, Michigan, Indiana, Illinois, and Iowa, while also deepening our footprint in our traditional foothold, such as Ohio, Pennsylvania, New York, and West Virginia. This transaction expands Zefiro's operational territory to 13 states with current or recent activity. Additionally, from a customer diversification perspective, the acquisition is particularly impactful. I believe that we expect to approximately double our E&P customer base as a result of our expanded geographic presence, and that kind of diversification significantly de-risks customer concentration and builds a more resilient business overall. This was far from the only important news in the quarter that I'd like to highlight. For instance, in Ohio, we continue to make strong progress on the Wood 12F Orphan Well project, which is valued at approximately $4.5 million and represents the second largest orphan well project in P&G's history. As of the end of Q3, we had completed 13 of the 37 wells, or just over 35% of the total scope, and we're continuing to make progress in Q4. We were also awarded the Richland 5, a new orphan well project by the Ohio Department of Natural Resources, valued at approximately $816,000, and that is set to kick off the last week of May. On the methane monitoring front, P&G quantified methane emissions on 407 wells during the quarter, and we're continuing to build this component of our business as demand persists under the EPA's methane emissions reduction program. Turning to our Louisiana project, this was a standout, not just a standout achievement of the quarter, but a standout achievement in the company's history. As many of you may recall, this was a $5 million plus energy infrastructure project that we launched in January 2026, and I'm proud to report that our team completed this project 3 weeks ahead of schedule during the quarter. This is a significant operational milestone. It demonstrates our ability to execute at a high level in new markets, and it reinforces our confidence in expanding our footprint in the Gulf Coast. P&G now holds a contractor's license in Louisiana, which positions us well to pursue additional opportunities in that market going forward. Looking ahead to Q4, we have a very active quarter in front of us. Key items to highlight would include our $19.6 million contract with Ohio for their methane emissions reduction program. There were some delays. This project was awarded to us last June, but some delays caused in just the reporting architecture to Department of Energy, who manages this program, as opposed to the Department of Interior that manages the IIJA funding. We believe that a lot of those kinks have been worked out now, with the belief that projects will begin to roll out the door in late May and ground to actually be broken in June of this year. We anticipate generating approximately $500,000 in revenue from this contract during the quarter upcoming, with the remaining $19.1 million to be realized between July of this year and May of 2029. We'll also be deploying a second rig in June of 2026 to one of our major natural gas producing customers. We will be targeting a handful of wells throughout West Virginia and Kentucky with this second rig that's working in conjunction with the first rig for the same customer throughout Pennsylvania and New York State. We expect to complete 27 of our 37 wells on the Wood 12F project by the end of the quarter, approximating roughly $1.5 million of revenue to be realized during the period. As mentioned before, we will also begin working on the Richland 5 project that was awarded to us back in January, and we expect that we will realize the full value of that contract of $816,000 by the end of the quarter. We have also been engaged by a private operator to remediate some injection disposal wells in Ohio and West Virginia. This project's expected to generate somewhere around $1.5 million during the upcoming quarter. And it's also an example of how the total addressable market for the remediation services that Zefiro offers to the market has grown potential in quite a number of different areas other than just a traditional oil and gas context. P&G has expanded its methane monitoring operations into Pennsylvania, complementing ongoing work that's happening in West Virginia. We're also expected to begin doing post-plugging measurements in West Virginia starting in the fall of this year. So with all that being said, we see strong potential to continue converting opportunities into revenue and are excited about what lies ahead as we move into the final quarter of our fiscal year and set the stage for a strong fiscal year 2027. Thank you, and I'll hand it back to Catherine to wrap up our call.
Thanks, Luke. This fiscal year has been defined by meaningful progress on multiple fronts. Over the course of these 9 months, we have grown our revenue, expanded our operational capabilities, and built a more resilient business, resolved a contested shareholder meeting with a decisive outcome, completed an accretive equipment acquisition that meaningfully expands our capacity and geographic reach, raised capital from 2 European institutional investors, and continued to improve our financial health through disciplined cost management and debt reduction. As we work towards closing out the fiscal year on June 30th, our focus remains where it has always been, executing on our strategy, serving our clients and communities with excellence, and delivering compounding value for our shareholders over the long term. Thank you for taking the time today to listen to our call. As you can tell from our comments, we are excited about the business outlook. I'd be happy to address additional questions or set up one-on-one meetings with anyone interested following today's call. Please reach out to investor@zefiromethane.com with any questions.